Hello, it's Andrea Jenson, and thanks so much for joining me on another episode of the Cash Flow CFO Podcast. And today we're going to talk about something that is super relevant for this time of year. So we are all looking ahead at closing out this year and determining what are our goals going to be for the following year. And so it's a great time to take stock in what's happened in your business. What were some of the successes? What were some of the misses from a financial perspective that you had? Did you reach your quarterly goals? Did you reach your annual goals, or are you going to? Once you take a look at where you've been, it's easier to determine where it is that you want to go forward. And so what we are doing with all of our clients right now, and we recommend that all of our listeners do as well, is to identify what you want to set as your financial goals for the upcoming 12 months. So anytime there's a new year on the horizon, it's a great time to do some planning and some brainstorming and really look at what is it that I would like for my business to achieve over the next 12 months. And so one of the first steps to doing that is to really understand all of your metrics in your business for where this last 11 months have put your business. So one of the first things that you can start to do is to look at some of the ratios. You want to look at, we always talk to our clients about having 4 big buckets of expenses, and I'll run through those real quick, and then I'll also provide a little bit more of a deep dive in the show notes for you. But essentially, you want to look at breaking up your revenue and as a percentage, right? So for every dollar that comes in revenue, it equals 100%. And you get to determine where you're going to allocate that 100% in when it comes to spending the money that your business needs to do in order to continue to service the sales that it's making, and also, do all of the other things that the business has to afford to do. So let me just, for example, give you an idea of what it is that I'm talking about. So your 4 big buckets are going to be your cost of goods, or cost of revenue if you're a service-based business, but we like to continue to call it cost of goods for simplicity with our clients, because that's a very common term that most of them have heard. The second bucket is going to be your general and administrative expenses, and I'll talk a little bit more about what those are in just a minute. Your third bucket is going to be your marketing, and that is any expense that you incur as a business to bring in a new lead. It's going to be a marketing expense. And then profit. Now, profit is really important to plan for, because your profit bucket has to do a lot of things in the business. So your profit bucket has to, number 1, pay income taxes. Number 2, it has to service any existing debt that the business has. Number 3, that's where you're going to be reinvesting back into your business. And number 4, that's where your owner's distributions are going to come. So you can see that profit bucket has a lot of different things that it has to cover. And so it's important that you have the right allocation going into your profit bucket. So let's also talk about, if for every dollar in revenue that comes in equals 100%, you get to decide, based on your business model and your business goals, where each of those percentages are going to be allocated. So most companies have about 40 to 50% cost of goods, 20 to 30% in your general and administrative expenses, and between 5 and 10 in marketing, and then profit. So what you want to do is, the first step is look at your cost of goods. Now, your cost of goods is going to be any expense that is incurred to service the sale. So that could be, a lot of different things depending on what your business is, but you want to look at, would I have spent this money if I did not make the sale? So that's going to be your direct labor. That's going to be any production costs, product costs, if you're a product-based business, shipping, things like that. So any expense that is directly incurred to service the sale is going to be your cost of goods. So we've said that marketing is the cost to generate leads. We've said that cost of goods are the direct expenses that are incurred to service the sale. The general and administrative bucket is kind of just that catch-all, and it's going to collect all the other expenses. So the real trick to making sure that your business model is profitable is to see, can I stay within those percent allocations for each of those buckets? So we'll talk more about if you can't fit into those allocations on another show, because we've got some tips and techniques that we use to help our clients get into those percentages. But for what you want to do right now at this time of year, you really want to be preparing that 2023 budget. And so what that's going to look like is, once you understand how much your business generated in revenue, what your percentage allocation of expenses were, then you're going to be able to say, okay, how much do I want to grow going into the next year? You're going to layer in that growth, and then you should be able to create that same correlation between all of those expense accounts. So that's how you want to take that first step into preparing your 2023 budget. And we will also provide a few links down below to help you do that. And we're going to continue to create these trainings for you because we think they're so valuable. And if more businesses had a solid plan in place for their growth, then they would not have to worry about all of the up and downs, the roller coaster ride of cash flow. And we all know that as your business is growing, one of the most important things that it needs is cash. Okay, but you want to make sure that you're spending that cash in the right places, on the right team members, and you want to make sure that you're plugging any money leaks in your business so that you're not just making sales and bringing in money and then it's going right back out the back door just as fast as it's coming in. Because that is very defeating, right? To feel that way. It's like, oh, I just keep selling more, but there's nothing left over. That's because you don't have a plan for your money and you don't have a budget in place. Once you have a budget in place, it's so helpful to every month, once your books are closed by the 5th, by the 10th at the very latest, sit down, have your bookkeeper do a budget versus actual, have your financial team really present it to you in a way that it's actionable, right? So that you, the business owner, can use it as a tool to guide you and to make decisions on how to best run your business, what you can afford, what you can't afford. It's going to show you, right? Because the numbers don't lie. It's going to show you all the things that you need to know that you're kind of just guessing about if you don't have a budget in place. So that's one of the first steps I recommend for all of our listeners to sit down and get super clear on. And then from there, it's easy to create the budget for next year because you have those big bucket allocations in place, and then all of your other expenses just fit within each of those. So for example, if you're looking at your cost of goods, if you're not within that price range, you have to do a few things, right? You can't continue on the next year not staying within that allocation because you're not going to be profitable. You're not going to have enough money left over to run your business, to generate new leads, and to do all of the things that you need it to do. So take a look, run this analysis on your business right now and see how everything measures up. And then from there, once you've got that allocation in place, you can go forward and keep creating that 2023 budget. So I hope this was helpful, and I'll be talking a lot more about this, especially at this time of the year, because it's super important to do. And this is something that you can ask your financial team to help you prepare. And then I hope that you'll use this as a tool going forward, because that budget, looking at the budget versus actual, is so helpful and it's so meaningful. And it really just gives everybody in the business so much more clarity and understanding of where we're hitting the mark, where we're not, and then exactly what to do to fix it. So thanks for spending some time with me, and hope you have a great rest of the day.